umeinvest stocks now, you've not yet gotten the returns that you had pictured. The problem is not that you do not have the intelligence to understand the stock market. Also, it's not a problem with the amount of money that you're putting in. In this video, I'm going to show the various types of factors that are affecting your stocks and why it might be a good idea to understand the various types of risks so that you can understand why your stock is performing the way it's performing. So I'm going to go through 4 types of risks. Now you will see when each of them affects your stock, how to guard against those types of risks. And let's get started. Risk ya kwanza inaitagwa the company risk. Hiyo ni kusema, for example, KPLC ilikuwa imeomba debt mob ili kuexpand its operations, and then it was unable to repay that debt because of a very specific thing specific to that company. So hiyo ndio risk ya kwanza. Inaweza kuwa ni kitu kama mismanagement ama embezzlement, things that make that particular company fail. So it's the same thing that happened to TCL, TransCentury Limited, hadi ikakuwa suspended from trading in the NSE. So inaitwa company risk. The next type of risk, hii nayo, it's very strong and powerful because it doesn't affect just one company. It affects a number of companies in a specific sector. So unaweza pata that maybe interest rates zimeongezwa in the country. So what might happen is that banks might have to increase interest rates, which reduces borrowing, which reduces their income. So that might affect the performance of banks, which might make their share price ianguke. So that's a kind of risk that is particular to a certain industry or sector. Inaweza kuwa maybe hata kama if you have shares in KPLC, now you've been following it for a while, how does it perform when there is drought? So zenye imepata maji hakuna kwa dams, so it produces like less power. How does it do? So it's not only KPLC, it affects other power producing companies or KenGen, hizo. So that's very specific to the industry. Another kind of risk is at one higher level, and the higher it is, the more widespread iko geographically. So unaweza pata that, for example, Kenya shilling imeanza kupanda, and that sort of affects importation cost because a lot of companies import things. It might also affect interest rates, which affects borrowing and which affects income for a lot of companies. So such things happening at the country level are also risky. Maybe something else that you might have been familiar with, like all these violence that seems to attend elections. Unapata time elections, kuna hiyo like a quiet tension that something violent might happen. So in such cases, unapata maybe there's not so much economic activity, and when it's like really bad, it makes like foreign investors watoe investments zao and stocks like go down. Also, in some cases, though it hasn't happened for Kenya, a country inaweza jipata mahali it has to default on a loan because Kenya was almost at that point time ya Eurobond 2024, and you should have seen how the stock prices fell. It's that government finances are really critical in the investing environment. Na saa zenye gava haiwezi lipa back its loans, then it means that at some point taxes might be raised, ama interest rates might be raised. Taxes itaraiziwa juu they need to have money to repay back the loan, or the interest rates might be raised in order to attract more funding kwa bonds zake in order to repay your loan. And once a country gets to that, it's a very, very, very dangerous thing. But that's besides the point. The fact of the matter is there are these countrywide risks. Now, some of them are very macroeconomic in nature. Macroeconomic kumaanisha they affect the economy at a high level. Exchange rate, currency, printing of money, etc. So unacheki that those factors that affect the investments at a high level zina affect every stock in the stock exchange. So you might find that yes, you invested, your company is performing well, your sector is performing really well, but then unashanga, why is the stock falling? Yeah, unacheki. That's why it's not like just sufficient. In the long run, it might actually be like a good idea to like really buy a good company. And that's something that I emphasize on. Buy a great company, a company that you want control over, a company ambayo that's profitable so that you get dividends. Because if you just like try and scrap off of daily movements up and down, I don't know how that's a very solid strategy for building wealth. I think the most strongest strategy ni buy companies that are good and that you understand model yake and you understand that itakuwa profitable in the future. So, what is the fourth type of risk? Risk ya nne, unakumbuka time ya COVID, when things had frozen, everything had shut down, but airports are empty, people are not flying in or out. So it's not only the airports that weren't making money, but yes, maybe stock airport zimeenda chini, and huko majuu people are even like shorting these companies that really depend on oil sana, transport, air, na vehicles, land vehicles. So they are being shorted a lot because there wasn't going to be a lot of economic activity. So when such things happen, COVID, the 2008 global financial crisis, the dot-com bubble, things that bring to a halt kama the world economy. Hiyo ni kusema that almost every asset class yukuaga very, very much affected. Kutoka stocks, currencies, gold, bonds, hizo vitu zote zinakuwa like so much affected. Some of them are really, really good. Like time ya COVID, for example, we had so many people selling off stocks in developing countries, right? And then unapata a lot of money was going towards US treasuries, that's US government bonds, because wako almost sure that they can't be defaulted on, though there's always like a first time for everything. So that's also like a risk, but they're less risky than bonds for developing countries. So lipata maybe developing country stocks went down because investors pulled out their money and they sell, and selling causes prices to go down. That's in everything. Hata mboga, selling will cause prices to go down. So unapata foreign investors were getting their money from developing countries and going to bonds in the US. But even then, the stock markets za US zilikuwa zinashuka, and bonds became like the thing afterwards. But also during that time in COVID, something important was happening pia. You as a person could also buy companies that were being sold off, and you buy them for cheap. It was risky sababu haukuwa unajua ati what was going to happen during that time in terms of the world. It seemed like the end of the world. So during that time people were selling off to get cash, to get into bonds, US bonds especially. So the thing ni ati those times can provide very good buying opportunities. Sa zenye mtu kila mtu amepanic, kila mtu ameenda anataka kuuza apate cash. Those are like really good opportunities, and they happen after stock market crash when everyone is selling. But in order to like be able to buy, you need to be like really ready with your cash. So save up, ukuwe na pesa ya kununua shares when that time comes. So how tumeona that one way that you might protect yourself against the global type of risk ni by one, diversifying your asset classes. Usinunue stocks pekee. Don't put all your money in stocks, and most of all, don't put money that you need in the next 1 year, in the next 2 years. Weka pesa that you'll to grow your wealth, your capital in the long term. Usiweke yenye unahitaji kulipa fees next year ama kununua chakula next week. No. So diversify your portfolio into various asset classes. Save up your money in order to buy good companies when they are cheap, especially saa zenye kuna uncertainty. That's like the best time to like do it. So how does one protect themselves against the country risk yenye tumeongea? The whole country is being affected. The thing to do with that is by diversifying into a number of countries. Move out into a lot of countries so that when something affects one country, you are able to offset the risks za country moja with the benefits of investing in another country. And if you're liking this video up to now, press that like button. So how do you protect yourself against a sector risk? Same kama banking, ama manufacturing, etc. The thing to do here is by diversifying as well. On top of diversification, wahitaji kuelewa the factors ambazo zina affect that particular stock. For example, bank kama Equity, of course it affectiwa na the stock, the interest rates, right? That's a very big thing. Of course it affectiwa na the amount of money in the economy. Of course it affectiwa na the political regulations zenye ziko for banking industry. So like kuelewa the banking the sector ambayo ikiwa ni kitu kama power, how is the weather like? How are the projections for the weather? Ziko kutakuwa na mvua enough ya kuensure that we have power in the coming year. Kutakuwa bei ya mafuta iko wapi? Ndio ikiwa kuna maji wanahitaji kutumia generators. How mafuta iko wapi? How is profitability likely to be? Okay? And remember that every downside iko na like an opportunity for every good company that's outside there. So, how do you protect yourself against a company risk? Hiyo najua hata by saizi ushaelewa. So maybe drop something in the comment if you know how you can protect yourself against company risk. And if you want to learn more about company kama KQ, just look at this video here.